you. Let me know where you're calling from, where you're logging on. But what I want to make sure that you guys focus on the most is your affirmation. So, you know, definitely important that we talk about where we're calling in from, but we want to talk about those affirmations. Okay, I see you, Louisiana. So, but I want to make sure we got Cali, Buffalo, yes, Fort Washington. Okay, okay. So now, Chicago, good evening, good evening. So, affirmations, 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 affirmations. Mindset, mindset, mindset is extremely powerful, all right? Your mindset. You really got to get into a space where you not only do you drop this, do you walk in this, but you meditate on this, okay? I am a BYOB master trader. I am the signal. All my trades in profit, I am 777. I am a BYOB master trader. I am the signal. All my trades in profit, I am 777. And so you want to get in a space where you meditate on that, where you walk in that. That's your energy. That's your energy. So I just want to welcome each and every last one of you all again to BYOB Market Talks. It has been a phenomenal week in the markets. We've had a phenomenal, and it's not over. It's not over. It's not over, because tomorrow is NFP, Non-Farm Payroll Friday. It's NFP. So welcome, welcome, welcome to BYOB Market Talks. Once again, ladies and gentlemen, this is Tasha M. Dyer, the Trade Whisperer, creator of the BYOB Cash Out Strategy. Yes, I see you talking about NFP Friday. You're getting excited, right? And I understand why. So what I want to do is tonight, I promise we'll talk about a few things. And that is, we're talking about the market, right? The market. Now, why is that? Because things have been transpiring. You know, we have our different analysis. We have understanding how it impacts the market, understanding the flow, how to utilize the tools. So hopefully we can get through all of this tonight. If we cannot, then, you know, we'll do 2 parts. So, and more than likely, this will be a 2-part series, you know, where we kind of talk about it today, then we bring it back next week on next Thursday, where we're talking about this as well, because I want you to understand the phases of the market, the time frame confluence, and trading with the trend, and of course, how to help utilize the tools to help you identify those things. So think about it for just a minute. We've been trading, and in the evenings, we're talking about what you see right now. We're talking about the market. We're talking about navigating the markets. Those are the things that we're talking about. And in the mornings, we execute. And you notice that we're pulling a lot of trades off of the vibrata. And when we pull those trades off of the vibrata, you know, it actually goes into profit. And we analyze it from the point of, can I take the trade? Can I not take the trade? Can I take the trade? Can I not take the trade? And so that's really the mindset where I really want you right now. That's the mindset of what I really want you to understand. You know, can I take the trade? Can I not take the trade? Okay. So just kind of keep that in mind. All right. So the phases of the market, this is where we are right now, the phases of the market. And this is where I want you all to understand how this works, okay? And we talk about your emotions all the time. We talk about, you know, right now we have our U.S. election happening. You got Brexit, deal or no deal. So honestly, you got the election, you got a Brexit, deal or no deal, and then you have a U.S. stimulus package, deal or no deal. And so all of that is the emotional side of the market. And you have to be able to look at the market. You have to be able to understand the market. You have to be able to understand what we're talking about right here without, you know, really without the emotions attached to it, okay? You know, without those emotions attached to it. And so now if you got a question, drop it in the chat. Drop it in the chat, I will get to it. But what you see right here is what you're looking at is, I'm looking at the different stages. The market moves in phases. And so accumulation is stage 1. All right. And this is really, really important for you to understand. And you hear it all the time. You hear the market goes up. Okay. The market goes up. We hear this like, oh, the market goes up. The market goes sideways and it goes back down. Real simple, right? But this is reality. The market goes up, the market goes sideways, and the market goes back down. Market goes sideways again, which is right here, and then it goes back up. So this is just the simplicity of the market. And so you want to make sure that you're able to see this and understand how it's impacted without the emotions and everything that's attached to it. So when you have your accumulation phase, this happens after prices fall. So you see how it goes back into phase one. And so you really want to have the mindset and the understanding of what the market's doing. So you can definitely see, like, this is the accumulation phase, which is down here at the bottom. And it's after a sale, it's after a downward trend, it's afterwards. So this is where we're riding across the bottom. And honestly, it's like a range. You'll see the market, and you'll see the market looking like it's in a range. And so that's really, so these two phases, phase three, stage three, phase three, and the first one are those ranges that we always see in the market. And this one is literally the accumulation. Think about it like it's gearing up, right? We're ramping up, you know. But honestly, while you're in this phase, the buyers and sellers have equilibrium. So neither one of them really is in control. And so it's not a buyer's market, it's not a seller's market, it's an equilibrium. Okay, so this is just what happens. And it really can look consolidated on the higher time frame. It can just look consolidated. It can last for months. It's not necessarily something that's just gonna be like a week or so, you know. That's not what this is. So just really want, you know, as you're understanding that this is, you know, what the market does. Now you have your advancing. This is stage two, where it's advancing. And so this is after the market breaks out of the accumulation. It's the advancing stage. And so you notice in here, you got your higher highs and your higher lows. You got your higher highs and your higher lows. This is that trend. Your higher highs and your higher lows, your higher highs and your higher lows, right? And then this is what that does. And so when we talk about the trading, we're talking about you being able to trade after the, you know, we'd always talk about the pullbacks, impulse, correction, continuation, correction, continuation, correction, continuation, correction, continuation. So when we get the triggers, right? When we get those triggers, the triggers are always, think about it, those triggers are always around these pullbacks. How the vibrato works is, you notice that these should be at the same space. This is where your support and resistance line will go. This is where your support and resistance line will go. And so those triggers that the vibrato gives us are always around these areas. You know, this is always around. So this is where we're trying to enter. When I tell you guys, don't enter until it pushes through the line. Every time it gets to a support resistance line, you're going to get some pullback. Well, that's what this is. This is that pullback. So you notice that you always get this, and this is where those triggers happen. This is where those triggers alert you, but you still have to analyze it, okay? So I don't want you to think that you can just take the trade. It's still something that you have to analyze. And so you notice that the market is in an uptrend. You notice that it's going, you know, we got it going sideways. That is what this is. I mean, not sideways, it's that after the correction pullback. This is what it looks like in the market. And so this is really that picture perfect, you know, that this perfect painting picture that we're creating right here. But you know, the market can look a little this way. It can go like a way this way. You know, the market can do many things, but this is what you're looking for, okay? This is what you're identifying. So this is what you want to see. And then of course, after the uptrend, we're gonna go to that distribution. Same exact thing as the accumulation, but now we're in distribution. The distribution is after that uptrend. It's the bulls and the bears are back at equilibrium. Nobody's in control right now. Nobody's in control right here. And once again, this is a range. And so you notice that all of these can be, you know, all of these can be the buys, the sales, you know, and you're looking at it and you're trying to find some trends, and you notice when I say, okay, the market's moving sideways, this is sideways, okay? This is sideways. And then of course you got your downtrend. You know, we got this downtrend that happens, and it's that declining phase. It's that selling, it's that declining. So we're advancing, we're declining. We're in an uptrend, we're in a downtrend. Same thing, impulse, correction, continuation, correction, continuation, correction, continuation, okay? So this is where you want to be. This is where you want to understand. So this is, you want to understand how the market moves. And so you typically are gonna trade, you get in the trades when I tell you wait, and then you have those pullbacks. I tell you wait, and then you have those pullbacks, and that's where you're looking. So once again, this is where we get those triggers, right? This is where we end up with those triggers. And think about it, you know, when we're saying wait, you think about the market is you know, not, these are my numbers, you know, not statistically proven, but the market is literally like 10% buying, 10% selling, and 80% waiting. And you're waiting for the pullback so you can enter the trade. You're waiting to see what it's doing. You're waiting on the proper setup. You're waiting on those things. But I want you to shift your thought process and your mindset, because if you think about it, how long do we wait? How long do we wait for a 401k? How long do we wait for a retirement plan? How long do we wait? You wait 10, 20, 30, 40 years. You can wait on a pullback. You can wait for the market to set up, because we want to make sure you're operating at the optimal, you know, you're just operating at your highest level of precision and execution. This is where you want to be, right? This is where you want to make sure you are. So.
You're on a call. Call me back, Nita.
I need you to mute your lines. All right. So now you see right here, that's what that is. That's what you're looking for. So now, all right, let me get, okay, here it is, my mouse. So now understand that when you notice when this is transitioning, okay, when it's transitioning into those stages, okay, you're gonna have a breakout and it's gonna retest. Same thing, it always, when it breaks out of this stage, it's always gonna retest. When it breaks out of this stage, it's always going to retest. So you notice that's what it does. When it stops making those higher highs, we are transitioning into that distribution. When it stops making our lower highs and our lower lows, right, we stopped. And so now we're going into accumulation. So those are the things that you always want to look out for. When we are, you know, we say, look at, even we get the triggers, we look at the big picture of the market, so we can know where we are in the market, so we can take our trades. Do I scalp where I get my 10 pips and cash out? Or am I doing 5 pips on a 5-minute chart? Or am I going zone to zone? Zone to zone is from here to here, from here to here. You know, what is it that I'm doing from here to here? You know, when I get after that pullback from here to here, zone to zone, that's what you're looking for, okay? That's what you want to understand. And so this is going to help you right now. On Tuesday, we did not have a call. We did not have a call on Tuesday. And that was so you can watch the election, so you can understand what happened and what transpires. Just like this morning, we knew that there was going to be pullback on the GBP USD and a few other the GBP pairs. You know, the Brexit deal, no deal. So we were expecting a sell, but we said, hold off, wait, don't do anything. We're expecting a sell, but we said, hold off, don't do anything, because we knew it had to pull back. We knew it had to go into a correction before it went back down into that sell. And so what that correction should have shown you is, okay, and I'm gonna pull the charts up in a minute so we can look at it again. But what that correction should have showed you is understanding that when you look at that, what that correction is showing you is that we expected that correction to come to about right here, like what you see right here. This is what we expected to happen. But because of the news, and this is why we wait, this is another indication of why we wait. Because of the news, it didn't stop right there. It kept going. It moved all the way up. It was like a news fight because we don't have a deal and we're going to court. And then now we got a deal. So, or not that we have a deal, but we're very optimistic that we're going to have a deal. And so that's really what happened this morning on our live call, actually in between the calls. So at 5 o'clock in the morning, we identify some trades and then come back at 9 o'clock. What really would have happened was this pullback, but instead of stopping right here for us to take that sale, it pushed up further. Now, many of you did cash out on this uptrend right here. You cashed out on this pullback. But it's always important for you to understand where you are in the market. Now, this is that bull market, just to kind of help you understand. So now, remember I said it's not always going to look that perfect, that perfect. This is where your emotions, why we always talk to you about your emotions. Why do we always talk to you about keeping your emotions in check? Why do we always talk to you about what you're feeding yourself, right? What is it that's happening? Because this is the emotional roller coaster that the market, the emotions, so you don't need to be there. We don't want to be on an emotional roller coaster. You want to be able to look at the market and understand this. For non-emotional, right? Emotional intelligence. And so you see, this is that accumulation phase where we're sideways, and then that trend starts where it breaks out. So it's breaking out and it starts making those higher highs. And what happens when you're emotional and not looking at it right, what happens is this is where you'll start selling. Instead of looking at this as just that impulse, that initial impulse is that breakout. That initial impulse is where the market comes out. This is what happens. You start selling right here, and you start selling, and you see it's what you call a shakeout. So this is where we start selling. We don't want to be here. You don't want to get here. This is why your stop loss is important. This is why your stop loss is important. Because what happens is, it's coming back. The market's coming back. It's going to turn around. I got this, and it's not going to come back. It's not going to turn around. It is actually the trend, and uptrend is emerging. An uptrend has begun. It broke out of the accumulation phase. It broke out, but it's going to retest. It is going to do a correction. That is going to happen, okay? So this is where you don't want to start selling. You want to pay attention to this. And now we have our momentum, and our momentum is building up, okay? You see where it says it's building up. You see where it says that the market is building, and the trends, now everybody knows we're in a trend. Everybody can see the trend. We know we're in a trend. And then you start getting your optimism. And of course, you got a correction. This is a correction. That's what that is. Does it look very familiar now? When you're looking at the market like this actually looks like a GBP pair, right? That's what it looks like. So, but when I'm looking at the market like this, and this is why I tell you the market is not bipolar. It's not. This is just what the market looks like. We want it to look like this. And this is what it's doing. But it doesn't always look like this. It looks like this. And so you have to be able to take this and make it look like this, okay? And see this. And so this is where that difference comes in. This is where you are understanding the market. And so what happens is you'll get this pullback. So you see I got impulse. It broke out of the market. I have correction. All right, I got correction. Then I have continuation. This is my continuation. We're still making higher highs. We're still making higher highs, and we're still making higher lows. So this is what you want to pay attention to. This low is higher than this low. This low is higher than this low. So you want to pay attention. Where am I at in the market? Where am I at in the market? And so when you get this pullback right here, you understand you get this pullback, then the market's going to keep going. So this is that pullback. And so what happens is some of you all will sell, okay? So this is some of you all will sell. And you don't want to do that. We don't need to sell. And so this is where we say, okay, we'll get on a trigger on a vibrato. We'll get the alert but at the same time, you don't want to keep going, right? You need to know where you are in the market. Don't blindly take them. And you know, you want to know where. So you want to know, am I trading? Am I counter trend trading, or am I trading with the trend? Am I counter trend trading, or am I trading with the trend? Because this is where you'll get, right? This is where you'll think you're selling if you don't analyze it, and then you'll end up getting caught up when it goes back into the direction it's supposed to go in. So, and this is where you hear a lot of people start talking about, oh, right, even if you look back at last, you know, you look back at last week's training that we did in those zones, and you'll start hearing people talk about market manipulation. Well, it's not manipulation. Manipulation is when I don't know you're trying to do something. Well, manipulation is when I don't know something is happening. Well, we know what the market's doing. We know it's got zones. We know it has support and resistance, and we know this. And so you always want to operate from that standpoint. You always want to operate from the mentality that we know what the market's doing. And when you do that and you don't think somebody's out to get you, where you analyze the market properly, then the market's going to tell you what it's doing. The market's going to do it, and you're walking into it with a right mentality. And so you can execute your trades with precision. All right. And then of course, right, then of course you get up here, and this is where you feel like you're being left behind. Okay, that fear of missing out. Everybody's going buying. Everybody's in this trade. Can I still get in the trade? Is it too late to get into the trade? Does that sound familiar? You know, we look at it and be like, oh man, I want to take that trade. I want to get in that trade. That could have happened to us this morning on the sale. Oh my goodness, it's I missed it. It started at 4, we on here at 5. Can I get into this sale? Wait on the pullback. So have you gotten in that trade without waiting on that pullback? What happened when that Brexit deal, no deal conversation happened? That market shot up and it went up like 100 pips. So you don't want to do that. We don't want to operate in the fear of missing out at all. We want to wait, 80% waiting, and it's okay. It's okay. So because what happens is you get up here and you think you're just going to keep buying, or you think the market going to keep going because now you jumped into the trade and now I'm here. But guess what? It quit making higher highs and it quit making higher lows. And so now you're in this trade, and guess what? The trade's done. The uptrend is finished. And then of course, the same thing happens from the bear market. So it's going to break out. It's going to break out of that distribution phase. It's going to break out of there. So, and then the same thing, it gets that impulse correction, continuation correction, continuation correction, continuation correction, continuation, right? And this is that same thought process and that same mentality that you have to have. This is what that is. And so what happens is you don't want to start buying here, or if you're buying anything, you need to know that you're trading a correction. You have to know that you are trading a correction. That's what you have to know. So, you know, you have to know that you are trading a correction. And then as it's coming down, right? As it's coming down, same thing. You know, we understand the trend change. You got, you know, don't really read these per se, because this applies to all markets, right? This is where you have the best of both worlds, because we buy and sell. We don't just buy. We don't have to buy and hold on to. This is the beauty of trading. This is the beauty of trading. This is the beauty of the foreign exchange market, because this is applicable to every single market. And so what we've been taught is that I want to buy and I want to hold and I have to pray that it rises. And so this is thinking of, you know, where it's coming down, but at the same time, what we talked about on the previous slide is what's happening there. So, but this is just the psychology, because remember, even though these specific things don't apply to you, remember what we're looking at is buyers and sellers in the market. We're looking at real people. These are real transactions that are happening. And so this is very applicable. It's just that you operate, it's like you're looking down on the charts and you're watching transactions happen, and you're watching these transactions that are taking place. And so this is what they're feeling. So remember, we're not emotional. They are. We ride the wave. So you just think about you being on your little surfboard. Well, you know, the surfboard, you're riding the wave. You're riding the wave. You're riding the wave. And so, and this is what they're thinking. So they're like not feeling very good about this sale. So they're not. But you remember, if you understand market psychology, that sale happens a lot faster than that buy. You notice that the buy on the buy one, look how it went, right? Look at how it went sideways. Look at how it's going, right? And oh, okay, well, there you have it. I went back. So, but this is recorded. So this will be on the YouTube channel. So this is recorded. So you will be able to come back and view this. So you see that this is going up, and you look at how nice and sideways it's going and how it's moving. But then look at how much firmer that sale is. The sales always happen because people are emotional. They're emotional. Look, important change in the market behavior and psychology. They are emotional. So we're not emotional. That's why we pay attention to what we feed ourselves. You know, why do we always talk about the news? Okay, we pay attention. And so you kind of see what's happening. And then you see when they get down here, it's talking about deflation and all hope is lost. And so this is where they are. So they're gonna be trying to get out of there. And remember, this phase right here, this declining phase, this phase where we're going sideways, remember, I'm gonna go back to the one in the front. This one, the accumulation and the distribution, the accumulation and the distribution, this can last a while. These can last for months. So that's why we don't hold those trades like that, okay? That's why we don't hold those trades like that. So let me go to the charts. Let's go look at this on the charts. Let's look at this on the charts. So now we're here, all right? Now when we are here on the charts, all right? Now on the charts, right? On the charts. This is what you're looking at. I got GBP USD pulled up. Give me a second. All right. Is it gonna freeze on me? Okay, here we go. There it is. I'm like, it was a delay in the changeover. So as you're looking at this, and as you're looking at the charts, you know, aha, teach me to fish. I love it. I love it. So as you're looking at this, think about it. This is that phase. This is that accumulation phase, okay? You notice I'm on a daily chart. So let me re-emphasize something, because I know we have some individuals that are new to the call. We have individuals, this is your first time on the call. And then of course we have individuals that are still learning. And so I want to re-emphasize something. The higher time frames tell you what the overall picture of the market is doing. The higher time frames tell you what the market is doing. It's the lower time frames that are all the movement. You see the movement and activity, because on this chart right here, where we're on the daily chart, one candle is 24 hours. So think about it. That means in this one is 24 of these, okay? So you got to think about that for a minute. One candle lasts an entire day. So, you know, unless you're a swing trader, you're not swinging the market. You're not trading the market off of this. Unless you're a swing trader, that's when you're trading off of here. Okay. That's when you're really trading off of here if you're a swing trader. And so now, but to understand, just to kind of, so you can understand what we just talked about, what does the market do? The market moves up, the market goes sideways, the market moves up, the market goes sideways, the market moves down, right? And then it goes sideways again. So it just does the same thing over and over and over and over and over again. I mean, look at this uptrend. If I was to put a trend line on here, you know, look at this. So it's what we talk about all the time. Look at this uptrend. So the market is in an uptrend. The market is moving up. So this is what the market does. You can see it a lot clearer now with that line right.
You know what I'm saying? If your child, yeah.
I need you all to have some courtesy on the call with your mute buttons. So you definitely want to pay attention to that. So now you have the, you know, you see that uptrend, all right? So now what you're doing is right here, that's that phase, and you see it broke out. You see I got it a little high. It can really be down here, but I just kind of drew it in here to kind of block it off. I didn't really come draw support and resistance lines. I didn't do any of that. I just wanted to block it off for you guys. But you see where it breaks out and it retests. It breaks out and it retests. And then we start getting our higher highs and our higher highs and our higher lows. We start getting all of that. And then of course it stops. The market stops, okay? And so this is where these triggers come in, right? This is where all of this begins to happen. Move sideways. Now, when we talk about months and everything, look, so I just kind of went back on the chart, but look, that's October 16, and look, that's April 17. So do you see how that lasted for months? So on a daily time frame, this was in a range for months. It was in a range for months. But then also in here, what do you have in my range? I have other trends in there. So you definitely, this is why when you see a chart and you see trend lines, you see trend lines everywhere. You know, it's like, oh, I got a trend line here, I got a trend line right here, I got a trend line moving this way, got a trend line moving that way. You know, that's why you see all of that. But this is that sideways motion, and that lasted for months. That's the big picture for you to understand the big picture of the market, okay? That's that big picture. And so then you're trading. What we're doing all day is we're trading inside of here. We're trading inside of here. We're trading here. We're trading inside of this. And so this is really what the market is. So before we go any further, do I have any questions, comments, or testimonies? Questions, comments, or testimonies? Because I am going, and just drop it in the chat. Questions, comments, testimonies. Because I'm definitely going to you know, just in case you have any questions, comments. I just want to make sure I get them addressed right now. All right, so I'm gonna keep going. All right, so now if I come over here, same thing. Now, before I even do this, I want to help you understand the power of the vibrato, okay? I definitely want you to understand the power of the vibrato. So I just told you, we just broke it down. We just analyzed it. You know, you got your support and resistance lines, you got your higher highs, your higher lows, your lower highs, your lower lows. You have all of that that's happening in this market. You got where you understand impulse correction, continuation correction. And notice it don't always come all the way back up there, but we still had a correction there. But it doesn't always come all the way back up here. So it's never gonna be picture perfect, right? It's never gonna be, well, oh my goodness, it did this, it didn't do this, it did this, it didn't do that, right? Never gonna be that. But you notice it's still gonna flow with the BYOB cash out, which we're gonna explain in a minute. We're gonna explain the strategy to you in just a second. But what I want you to understand, well, thank you. So what I want you to understand is the power of this tool. So I just gave you a big, the understanding of how the market moves. Now, the power of this tool. Now, this is actually our BYOB visionary on here, and Mr. Gerald D. Rogers, and the power of this tool. So now you will actually appreciate when you get those triggers and those alerts that come through there, they're not signals. You still have to analyze it. But I want you to understand the power behind this. So I'm gonna just play this just because, and I want you to understand, he's got a background in investment banking. And so when we talk about 1 million families financially educated and impacted, 1 million families financially educated and impacted. That's the purpose of what we're doing. And we want you to understand the power behind what this tool does for you.
Wow, folks, I'm just absolutely amazed to know that I'm a part of an organization looking to empower and impact lives across the globe. I've been in this space for over 20 years, commercial banking, lending, and when I look at the web analyzer in comparison to what the big banks of the world utilize, that web analyzer is equivalent, far exceeds the expectation that I was anticipating after having that experience on the investment market. So folks, for those of you who don't understand the magnitude of what you have your hands on, I encourage you, I challenge you to take a deeper dive and realize that literally you have in your own hands the power to become your own bank and allow us to be your partner, to empower you economically, financially, and leave a true legacy.
So ladies and gentlemen, I just wanted you to understand the power of this tool, you know, the power that we're looking at. So what I did is I actually paused this, all right? And it's actually paused, and I want to show you something, okay? And then of course we'll talk about, and we can see those trades that happened this morning, but you notice I came down to the 4 hour. We had this GBP USD called on the 4 hour, and it being called on the 4 hour, right? This is the trigger, 129498, 129498, and it was called for a buy. So it triggered. Let me double tap, because it says UTC time at, let me see. So hold on, it might be over here somewhere, but I just want to understand. Yeah, it was here, because I'm like, how did it trigger way over there? So you look at it, this is where it happened. And I know it had another one down there, but this is the one we're looking at. So they had another one that happened that called for actual buy, okay? And that called for a buy. Now, what happened is when you're looking right here, so just, I already moved the line, but just think about it. It called for a buy. So that's where this was in a buy, and I'm gonna just drop one back on here. I'm gonna just drop one back on here so you can see them both, okay? I want you to see them both. So somewhere up in here. So I just want you to see them both. Now, it called for it, and then you can see what happened is after the correction, it moved. And this one was already moving, but you notice it triggers and we got support and resistance lines. Now, what I'm gonna do is I'm gonna check my daily, and when I check my daily, what happened, right? When I check my daily is in a buy. So I don't care what time frame you're on. It doesn't matter what time frame you're on. What matters is understanding, you know, where you are in the market. And that's why we tell you, you got to jump up. And then of course, I'm going to go down, you know, I'm going to go down for my time frame confluence. So, and when I go down for my time frame confluence, even if I go to the 30-minute, what you're seeing is I'm still in that buy. The time frame below has to still be buying. The one above has to look like it's going into. And then on the higher time frames, you trade from zone to zone. And you know, we got our pips. So, you know, let me actually drop down to the 15-minute chart where we typically take our trades from. And this is actually the trade from this morning. And you notice we've been consolidated ever since then. You know, they going back and forth. Deal, no deal, deal, no deal, deal, no deal, deal, no deal. And what did that mean to the market? Consolidation. That's some significant consolidation. So they left work with no information, and now look what the market's doing. So they've gone home, and now the market's going sideways. But this is what happened this morning, all right? So let's talk about what transpired, okay? So right here, this is the trade that started, okay? This is a trade that started this morning. This is a trade that we were in. Now let's talk about that. Well, that was in if you got on before the call. So now let's talk about it. What is the BYOB cash out strategy? You got the blue line that crossed over the red and that downward momentum. This is going to happen around the 80. It's going to happen around the 20. It's going to happen around the 80. It's going to happen around the 20. This is what this is. Blue line cross over the red and downward momentum. Blue line cross over the red and upward momentum, okay? Now, what happened is we had a red candle with a flat top, PSR flip to the top. Okay, and the reason I'm showing you this one is because we knew that we were gearing up, and a lot of you guys caught this back up. We knew that we were gearing up for a pullback. Okay, we were gearing up for that pullback. Now, what happened? Let me get wrong spot. Let me get an arrow right here and put one right here as well. All right, so let me get this one, and then I'm gonna come over here and I'm gonna get this one right there. So look at this for a second. So blue line cross over the red and upward momentum, blue line cross over the red and a downward momentum, red candle with a flat top, PSR flip to the top. So PSR, blue line, green candle with a flat bottom, PSR flip to the bottom. I'm trying to read and look at that at the same time. So this is where we were. I want to drop my support and resistance line on here so you can actually get the big grand scheme of things that transpired. So I'm going to drop that on here. Let me do this right here so you can see it. And now we had triggers for this. We had triggers for this. Oh, that one already has one. Let me delete it. We had triggers for this. All right, we had triggers for this. We had triggers for the sale right here. We had triggers for this to continue selling right here. Okay, we had triggers, and it was supposed to keep selling. And if you look at the big picture, all right, let's look at this just to show you how accurate those triggers are. Okay, just to kind of show you, because they're very accurate, but you have to wait on the setup. This is a trend line that we had on there this morning. So what did we just talk about on the slides? Impulse, correction, continuation, correction, continuation, correction, continuation. So if you were on the calls this morning, what you heard me say was we need to wait till it breaks through this line, right? We need to wait till it breaks through. Well, that breakthrough was coming back for a correction. It will bounce off the trend line and then come back down. That's what will happen, right? That's what will transpire. We had many alerts. We had many alerts, and it kept alerting over and over and over and over again, telling us to take a sale. That's what it was doing. Now, we don't get into it until everything is in alignment, which means we had to wait on the correction, because it's always called in a correction. And then when it's caught in a correction. So let's look at our time frame confluence. Well, this is our time frame confluence for this one. No, we were on an hour. So we were looking at it first, the 15 minute. 15 minutes started right there, right here. And let me get my flat bottom candle right there. And now let's look at our hour for our confluence. We have confluence. We even got confluence on the correction, right? We have that. This candle popped up and spiked up. And it was some breaking news. But you see how the news, when it impacts the market, is still in alignment with the strategy. It's still in alignment, okay? It's still in alignment. So you notice that when I'm looking at my time frame confluence, that on my hour, it needs to look like, well, look, it was supposed to come up here. It was supposed to stop right here. But we had news. So even still understanding the news is playing in this. And why am I talking about this right now? Why is this important right now? Why is this so important? What are we in? An election. So even in the midst of an election, we saw how nice and how many points we grabbed the other night on Tuesday during the debate. But you know, think about it. I told you guys when they had the election overseas, when they were talking about the Brexit, no deal, the Brexit, all of that was going on. The market's doing the same thing. It's doing the same thing. It's just doing a lot more, and you see it impacting more because of how strong the US dollar is, meaning that it's the major currency pairs, and then of course it's in the major currency pairs, and then of course the minors, you know, the crosses also are impacted by that as well, as Dr. B has explained to you all. So you see this, where it's going up. This is why we didn't take a sale. You don't get into the sale until the sale is in alignment. And when we saw this morning, you know, if you didn't take a nap between the calls, what you were able to do is ride this up. And if you rolled this up because it aligned, which means that something was going on, you rolled this up, that was like 100 pips right there, 99. So that's what happened. That's what you were able to do this morning. And it says that makes sense. The people that are moving large quantities of money are looking for the best time to exchange their money in order to save on that exchange, like the bank. Exactly, be your own bank. So now you know the difference between big bank, little bank, right? So you want to have a big bank mentality so you can use these tools. And so I'll cut these alerts back on, but cutting these alerts back on, you can see where all of this is coming through and all of this is happening, and you'll get these alerts, and they're valid, because even still, what happened? They turn around and they started calling for buys. So it triggered for buys. And then you check your confluence, even when they call it on the 5 minute. So now you understand when I'm saying start at the high, you know, even though I'm looking at the 5 minute, because the 5 minute is not going to give me the direction of the market. The 5 minute doesn't tell me where the market is going. It's all the activity that's happening in that larger candle. But I need to look at it, because if there's a change, it happens here first. So now you understand how these time frames work together. So in the daily, it's just one day. This is just one day. That's all that's happening. This is every hour. But in the hour, I got so many, I got 4 of these, and then I got 3 of these in this one. So I'm gonna see the activity, I'm gonna see the movement first. But because of so much activity, what if it was a correction? What if it's, you know, all of those things? So the higher time frames tell me what the market's doing, my lower time frames show me the activity. And with that activity, I know that I can come in here and take this trade. So now you begin to understand why when we do the strategy and why we start on a 15-minute chart. Because with the 15-minute chart, and in addition to the time frame confluence, you can get your 10 pips and cash out when you understand where the market's going. You can get your 10 pips and cash out. And then after I get my 10 pips and cash out, when I begin to understand support and resistance lines, as you increase your skill set, then of course we're gonna go here, and then like I would have traded to here. You notice how it pauses and it stops? So, but I'll be on a higher time frame. You guys support and resistance line every time frame. So, but questions, comments, testimonies. Questions, comments, testimonies. Questions, comments, testimonies. Because I don't want to get into, we only got a few minutes left. So if you got a question, now's the time to ask. Because I don't want to get into the overall, like the trends and pulling the trades to show you the trends. So next week we'll pull the trades and show you the trends, because I really want, now that you get the grand scheme, the big scheme of the market and understanding what the market does, I want to be able to take this and break this down to you and, you know, really understand how the vibrato moves with it. The gap in the market, oh, absolutely not. Absolutely not. Welcome, 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 welcome. Let me welcome you. Yeah, and so let me welcome you. And so you're not above your head. You're not above your head. And this is why we do affirmations at the beginning of this call. So just think about any time you learned anything. Okay, think about any time you learned anything. You had to start. And so these calls are actually broken down. This one is actually, the Thursday night calls are geared for utilizing the tools. The Tuesday night calls are basics. But you know, is you really just believe that you can do it, and you can. Okay, you want to believe that you can do it, and you can. If you think about it, you got to have faith, say what you want, really believe it, have no doubt, and it's going to happen. So my recommendation to you is walk in that faith, walk in that belief system, walk into it for yourself, and stay plugged in. Because just like when you're trying to learn a foreign language, or you're trying to learn anything, you're going to look at it and be like, oh my gosh, what is that? But you have to relax your shoulders. And when you relax, take a few breaths, walk in the affirmative, do your affirmations, clear your mind, and begin with, I mean, literally the first video is almost like, what is Forex? So you're gonna be able to master this. And remember, everybody on this call was a beginner first. I was a beginner 2 years ago. So you always want to walk. Everybody here had to start, because none of us were born knowing Forex. So you have to do that. Oh, well, thank you. Thank you. So let me see. And the time frame confluence when trade on the 5 is, yes, it's the 30-minute and the 1 minute. Absolutely. And then what you'll see me doing, especially right now, why am I getting you guys perfect practice makes perfect? Perfect practice makes perfect. Why am I gearing up, and why am I sharing this with you? Because why do I want to look at my higher time frames? Because of where you want to know where you are in the market, because of the election season and everything else. So you always want to know where you are in the market. But right now, the market's not going crazy. Is, you know, even with this correction, what transpired, we saw that it still geared up. We had a blue line cross over the red and an upward momentum. We had a green candle with a flat bottom. We had a PSR flip. So we still had that going on. So yeah, this is why we still check. So my confluence, to answer your question, is absolutely yes. 5 minute, 31, 15, 1 hour, 5 minute. Okay, that's your time frame confluence. However, you notice that even though it was triggering for a sale this morning, We knew it had to go into a correction because of where we were in the charts. So once that correction would have finished is when our sale would have happened. But it did not because of the news. So even when news breaks out, we're still in alignment. You explained it so incredibly well. Amazing. Thank you. Time and date correction at the bottom. So this is the time across the bottom. This is the price. This is the time and date. This is the price. Your price is where your pips are. Time and date, price. So think about it. This is UTC time. UTC time. So no matter where you are in the world, no matter where you are in the world, you know, you're going to be able to know. And so right here, you notice that when these alerts happen, they give you the UTC time, but they also give you the local time. If you look at the local time, for me, when it's triggered, it says 9:30. That was 15 minutes ago. You know, it says 9:30. Well, guess what? Yours might not say 9:30 for the local time, but the UTC time is so we're all on the same sheet of music. We got to be on the same sheet of music, no matter where we're trading. So this is the same chart everybody pulls up and looks at. Tasha's always on point. Thank you, thank you. I honestly thought that video was better than oh, thank you, thank you, thank you. Thank you. Exactly. This is how I learn, and I'm continuing to do so by staying plugged in. There you go. There you have it. There you have it. There you have it. There you have it. Right there. So you got a comment to go to the question of I'm a beginner. And trust me, everybody has felt that way. I'm a beginner. I'm a beginner. I'm a beginner. I felt that way at one point because I was a beginner. So, and that was just 2 years ago. So just think about it, okay? So just think about it. So I was a beginner, but now you see the young lady, Miss Clay, who dropped that in the chat, she always have a 777 in the chat. So just walk in your I am 777. You are the B. Oh, thank you, thank you, thank you. I really appreciate all the kind words from everybody. So yep, that means everyone can learn a new skill set. Absolutely, absolutely, absolutely. You know what? Everybody does not know what that means. So I'm going to leave that to my military folks. I'm going to leave that to my military people. So I'm going to leave that. Thank you for the wisdom. I'm a beginner. Oh, awesome, awesome, awesome. Walk in it, walk in it, walk in it. My confidence really comes from your training. I learn more and more. Oh, well, thank you guys. Well, thank you for your kind words. But walk in that I am 777. And I see we got quite a few beginners on the call, right? People who are new to trading. Walk in that energy. What you focus on is what you are. What you focus on is what you become. The energy that you walk in is who you will be. So if you believe you can, you can. If you believe you can't, you can't. I literally, you know, when I was trying to count pips, I was trying to learn how to count pips. That's my story. That's who I am. You know, I don't know why. I mean, I'm degreed. I got more than one. Got a few of them and some certificates to go along with that. But for some reason, those pips, I'd be like, oh my goodness. But every time I would look at those pips, every time I would see, and it's just adding and subtracting. I mean, seriously, you know, when I think about it, I'm like, what in the world? So, but just to help you understand the magnitude of, you know, what this is and how your mind can block you, is just, it's like when I relax and say, you know what? I am a master Forex educator. I didn't say I'm a master trader. I said I'm a master Forex educator. And this is what transpired. And I was still trying to learn how to count pips when I walked in that affirmation. And so now you see that this is where we are. And so now this is what's manifested. And so you want to walk in that energy, and you have to walk in that. That's why we do affirmations at the beginning of every call. And if you know, I try to keep it low, but that's relaxing in the background. It's gospel music playing in the background. You know, I got to be at peace and be in God's presence. You know, this is what relaxes me and gives me the ability to do what I do. It's the affirmations, but you hear what's in the background because I always want that in my spirit. So that's what this is what I do. So you have to create your environment. You have to create your environment and where you can relax your shoulders and always walk in that. You say, cut off the TV, this is the new program. Absolutely. So your mind is powerful. Your mind is so powerful. So any more questions, comments? Any more questions, comments, or testimonies? Questions, comments, testimonies. So you love that, this is the new program? Absolutely, this is the program. That is what this is. So that is what this is. You dreaming the patterns? Okay. Well, you guys know I love you. So what we're gonna do next week is we're gonna show you, we're gonna look at the trends again. You know, you always wanna look at them more than once. We're gonna look at the trends again, and we'll look at the trades that come with the trends. So that's what we're gonna do. The trades that come with the trends. And that's what we're gonna do. And today we looked at the patterns of the market. So we got the big picture, and then we're gonna pull it down. Now, can you show you a live transaction? Well, let me show you how these calls work. So let me explain to you how these calls work. In the morning, Monday through Thursday, don't wake up and log on tomorrow because tomorrow's Friday. So Monday through Thursday at 5 a.m. and 9 a.m. we're live in the market. And on Tuesdays and Thursday nights, this is what we call BYOB Market Talks, where you're learning and we're educating you. And then right after this call, so you need to stay put, is what we call a talk with the finance doctor. Now, you are the signal. That is why we focus on the education. So at night, in the evenings, this is the education. In the morning is the analyzation. The education, then the analyzation. So this is broken up like that because we don't do signals. We empower you to be the signal. So you're able to take this skill set, open up your tools, and learn how to trade and actually take your own trades, which is going to build your wealth. So the education is so important. So we don't, now if we see a trade, we're going to take it. But the evening is geared up for the teaching and the education. All right. That's what the evening is for. And so that way it empowers you to where you can open the charts anytime you want to. You do not have to take a signal, and you can actually navigate these charts. And then if you do see a signal, you can validate it, right? You can validate it with your analyzation because you are the signal. See, signals and just somebody giving trades is only going to get you some gas money or a little monthly, little here and there. You being the signal is going to build your wealth, and we're here for wealth building. We're here to build wealth and to learn to be the signal. So you are very, very welcome. You're very, very welcome. All right. So ladies and gentlemen, as I said, do not go anywhere. You guys know I love you. You know this has been amazing. This has been phenomenal because 1 million families financially educated and impacted. And this is why Be Your Own Bank is the largest economic empowerment movement in the history of mankind. This is what this is all about. And you guys are so very welcome. But it is time to transition this call. It is time to transition. So grab your pen, grab your paper, and I am definitely about to turn this call over to a gentleman that I have the utmost respect for. This gentleman has a PhD in finance and economics. We're talking about your